Good morning, traders. This is Michael coming to you from GammaEdge on Thursday, May 15th, with a pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently starting with our market trend model. This is based on the tick index. You can research that at your favorite investing website. But the quick takeaway of the tick index is it is buying versus selling of market participants. The bolded CT line that you see here, this is our cumulative tick. This is aggregated buyers versus sellers. Obviously, if the buyers are in control, which would be the bullish case and sentiment, you would want to see it going from lower left to upper right as viewed here. And if the bears are in control or sellers are trying to take control of the overall market, obviously you would see this going from upper left to lower right, like you saw yesterday. Again, the bolded CT is our short-term intraday tick cumulative. Then we have some moving averages that we place on here to give us an overall trend, kind of on immediate or intermediate or medium time frame. And then we have our large colored ribbon here. This is our longer term time frame of a longer term positioning of overall money or market participants. So looking quickly, yesterday we saw some selling come in. Obviously, when the bolded CTs start crossing below these moving averages, you can get a little bit more cautious on a shorter term look. On the longer term look, obviously, we're still very much in a bullish state. The buyers are still maintaining control. But on a short to intermediate term, you want to see this bolded CT start to flatten out like this and then start crossing back above the moving averages intraday to give you a longer or a long term or a long signal, intraday that would be tradable. As of now, the sellers started taking some profit in the short term to intermediate time frame. So that gives us a little bit of caution heading into the morning. Draw your attention up here to the breadth indicator. This is new highs versus new lows. So really just a pullback within the overall market uptrend. We saw more stocks being bought than sold yesterday. So again, as you see the bolded CT come down, even though selling is occurring, stocks are still being accumulated. So you make sure you continue to watch this. This filtered cumulative tick, this is filtered via plus 1,000, minus 1,000 larger block orders. Obviously, these are institutions or larger market participants or players in the overall stock index. So we did see that below zero and trending down yesterday. So we did see some institutional and larger market participants that are most likely taking profit or selling a little bit. Again, this can be an overall pullback within a longer term uptrend. So we'll continue to watch that. If we see this bolded CT start slicing through this colored ribbon and then moving to the downside and living below the colored ribbon for a significant amount of time, then we get a little bit more cautious on the longer term. But as of now, just a pullback with a longer term uptrend. Moving on to the ARCX tick index, which is what we use to mechanically use to open positions in our P-Trans to PEAK-X portfolio. Again, you saw the same thing occurring. The bolded CT start moving below the short-term moving averages, and again to the downside. So again, just a little bit of cautionary on a shorter-term time frame. Again, longer-term time frame looks bullish. So we would like to see this CT obviously come down into this area, start to flatten out, and then move back to the upside. This gives us an opportunity to get involved in the market on a pullback, provided that the structure and sentiment maintain bullish stances. SPXA, this is our cruise ship. These are longer term positioning. We followed the overall SPX options market because it's the largest and most liquid, has the most notional value. So again, 5/16, we have expiry coming up, OPEX. So we would want to move out to the longer term timeframes past the shortest expiry to look to see how positioning is. But coming into the OPEX, we are still call dominated within the overall structure, call dominated above and below spot price, as denoted by the green net deltas above spot price and below spot price. So any pullback, we would look to get involved in the overall market, noting those key delta levels. To the downside, we have 5850 and 5800. Obviously, gradients here, large net OI, large significant positive delta that most likely would be supportive on any pullback down into these areas. Again, know that these are longer term expiries. These don't change over as quickly. So this is kind of the 40,000 foot view. None of this really affects the intraday action. This just gives us an overall view of institutional positioning. And then you notice that 6,000 to the upside, significant level that probably most likely will be that target to the upside. A large amount of net OI up there. So again, it seems like out of the money call speculation continues to the upside. So that is bullish on a longer term, larger participant time frame. Moving on to the SPXA. Delta balance history, again noting that anything above zero indicates that that call speculators are in control of the overall market. The obviously green is our right hand plane above spot price, the red is the left hand plane, and the blue is the delta balance. So staying at 1 again indicates on out in time that market participants are participating with out of the money call speculation, and then denoting that the green line continues to climb even though we just turned down a little bit, but the blue and red lines continue to the upside and stay above zero. Moving on to the SPXA GEX ratio, we did see price try to make new highs, but the GEX ratio did drop a little bit. This is just indicating this is a put call ratio with a better indication because we add a time component, which is gamma to it. So this dropping and divergence in the GEX ratio is just indicating that out of the money call speculation shorter term may be dropping slightly. So again, this is just giving us a short term, or a little bit of a cautionary look as spot price continued to appreciate, but the GEX ratio started to drop. Again, out of the money call speculation can be waning a little bit after a significant move up in the overall market of like 20%. So moving on to the SPXP, these are speedboat. These contracts obviously turn over much more rapidly. You'll notice that these are 0 DT as well as weekly expiries. We are call dominated by both spot price, so bullish via sentiment and structure. Again, noting our transition areas, we have a confluence of 59.30 to the upside, watching 58.30 to the downside. Again, these are all expiries, so we'll move on to the 0 DT here in just a little bit, but denoting up here that we have PGEX and COI. This is the highest call open interest up here at 6,000. So again, a decent target to the upside as long as we stay above the transitions and move above 59.50. We have out of the money call speculation alive and well, above spot price, and then below spot price, this continues to be supportive. So for us, we'll continue to watch these intermediate areas to the downside, which would be 58.30, 5800. Obviously, we need to get above transition and stay above transition for us to have an opportunity to appreciate to the upside for today. Moving on to the GEX ratio for the SPXP, again denoting that we did have that drop in the overall GEX ratio as spot price tried to move higher. Again, the same thing that I was looking at in the SPXA. This is short-term call gamma or out of the money call speculation being removed from the complex as spot price continues to move higher. Which we do anticipate after a large move up. These call speculators want to be paid for their risk, so they're just taking some profit. And then we will continue to watch this. Most likely this resolves in either of two ways. The spot price will continue to come down as the speculation continues to drop, or we'll see some sort of consolidation up here with price, and then we'll see the GEX ratio start to rebound to the upside as out of the money call speculation comes in and out of the money put speculation starts to drop again. So we'll continue to watch this day over day and give you an idea of what's happening. The SPXP delta balance. So again, we separate these above and below spot price, just denoting what's happening in individual planes with speculation. You'll denote that the green continues to drop down towards the zero level. So this matches what we were seeing within the overall GEX ratio. This is the out of the money call speculation above spot price continues to drop. So again, this can just be profit taking. And then you'll notice the left-hand plane staying above zero and really constant. So that lets us know that the in-the-money calls below us are staying held very constant, and we do not see a significant amount of out-of-the-money call speculation to the downside. So again, most likely just a short-term pullback, and then you see it recover on out in time. This is projections of expiries out in time, and the delta balance stays pegged at 1. So this short-term weakness should not be a surprise to anybody. We discussed that yesterday. And then we're seeing that come to fruition yesterday and then into this morning, even with the pre-market bounce. So we'll continue to watch that day over day. Moving on to 0 DTE, we're call dominated above and below spot price. You'll notice we do see some in the money puts above us, but it's significantly above 59.50. Again, 6,000, noting the COI level. So it's the highest call open interest. So we have out of the money call speculation continuing above us. That's alive and well. You'll notice the confluence of the GEX and DEX transition. The GEX is the white box, the DEX is the blue box. bucks, 58.85 to the upside. That's that important key level that we need to get above if we want to see appreciation to 5,900. And then the quarter levels at 59.25 and half level at 59.50. Again, we have in the money or out of the money call speculation, but we do have a little bit of in the money puts just above us. Again, very low net delta. So noticing that those low exposure areas to the upside. Our drunken sailor range for today is 5,900. That's a confluence of PGEX and then NGEX to the downside, 58.45. If we get below 58.45, we'd probably anticipate some more weakness down towards this larger gradient of net delta. That would be supportive if in the money calls stay in the money, or we see these call speculators being maintained there, then we'd anticipate some sort of bounce or consolidation or stalling to the downside around the 5,800. If we do get below 5,800, we'd be a little more cautionary down towards the 58 or 57.50 level. But again, we're still in the money call dominated below spot price. But as spot price continues to move down, these can force these out of the money. But we're not anticipating or expecting that at all today. So we'll move on to our thesis here in just a minute. But noting these key transition areas that we need to be above for price to appreciate. Obviously, this just puts us in a little bit more call-dominated positive gamma state for price appreciation. All right, moving on to the SPY. Obviously, delta balance. We see this right-hand plane continue to drop. We talked about that. That's out of the money call speculation, most likely just market participants taking profits, minimizing risk after a large move up in the overall market. We see the delta balance continue to drop, and then we do see the left-hand plane drop slightly, but we're still above that zero level, indicating that call speculators are still in control with the delta balance, but it's coming down towards the zero level. So a significant more larger drop in out of the money call speculation. So we need to see this turn back to the upside for any sort of price appreciation via call speculation of out of the money calls above spot price. Moving on to the Qs, again, same thing. We see the right-hand plane continue to drop. This is out of the money call speculation. And then we see the delta balance confluence drop with that, but they see the left-hand plane really maintaining a good area. So in the money calls maintained below spot price. So that will continue to be supportive on any pullback. Move on to the SPXP net stat command. This gives us the highest sensitivity levels for today. I think I've already hit on that 5,800 in the money calls. Those will continue to be supportive. We see the 58.50 out of the money puts. If we're above that level, those will continue to charm and be supportive. And we see the out of the money calls above us at 5,900. These will be a ceiling. If we head up towards there, those out of the money calls will continue to exert their charm forces also. So we are between 58.50 and 5,900 on the charm if we do see some sort of consolidation. And then with the net delta, this is obviously the first order Greek. That's most important in the money calls. This will be supportive as long as we stay above 5,800. And then we see 58.90 to the upside, close enough to the 5,900 level. We already discussed those will be in the money puts. But you see the integral really is the left-hand plane integral in the money calls are dwarfing those in the money puts to the upside. And then Gamma and Vanna, the key sensitivity levels really line up with the other strikes we've talked about in the right-hand plane. So we'll move on to our thesis for today in the trading view chart. We did have a quick gap up. Let me look at this real quick. So quick gap up towards 58.78, 58.80. That was turned back pretty quickly, and now we're just consolidating around 58.66. So we'll move on to our thesis for today. So if we open roughly around 58.66, that would be just right at the bottom of transition of the DEX transition denoted by the blue box, and the GEX transition is the white box. So ultimately, for us to move up and move higher, we need to get above the transition areas. If we're within those overall transition areas, it can be extremely choppy back and forth within the GEX and DEX transition. Again, above this transition, we're still within the drunken sailor range at 5,900, and then conversely down here at 58.45. This is the full complex overlay of the trading view script that I have, and we have a confluence there of 0 GEX. So that's the balance level at the bottom of the drunken sailor range. So how do we play this? If we're within the overall transition, it's going to be extremely choppy. I would not take any trades. If you do get above transition, you could take a really quick short-term trade to the top of DS. You'd want to see the MTM starting to turn up. as well as the intraday vol M command with positive call and centroid slopes, indicating that out of the money call speculation is coming in and the put speculation is starting to wane. If we do see some sort of rejection up here at 5,900 and some sort of base and breakdown, you could play a quick trade back down to the top of transition. If we get into transition, obviously this would be choppy. Below transition, you could play a trade down towards the bottom of drunken sailor range at 58.45. Again, just indicating, or I'm just stating that we're within the overall drunken sailor range. So these are going to be very quick, very choppy trades. And if you see a vol M state that has a crossed call and put centroid, then obviously that would be a consolidation area and it would be a difficult to trade. If we do get below the drunken sailor range, I'd like to see us drop below and then have a retest back up here. And then if this was rejected, then I would likely play to the downside towards 5,800. Again, if we're within the overall transition range and we come from above and test the drunken sailor range, this would be a good area to get long as long as we see some sort of consolidation and hold and then break above a new high back towards the transition area. So multiple theses for today. Opening within the overall drunken sailor range is not key or not ideal. Opening right at transition is not key or ideal. So wait definitely for the opening range to short itself out. Let the book clear and we'll get hopefully a clearer picture of what is happening within this overall transition area. So with that, hope that helps everybody. A little bit longer this morning. I had a lot I wanted to cover. We didn't cover yesterday morning in the pre-market prep. So let's make it a great day and we'll see you in the Discord in a few minutes. Thanks.